Today, folks, this market has been nothing short of astonishing. I'm forever grateful to the community that has been following me on my financial independence to perhaps retire early journey. I never thought that I'd be knocking on almost $500,000 considering where we were at just in April, man. I went so aggressive in the market in April, and yet I haven't really been overly buying with the exception of maybe a bit more VDY a couple weeks ago. But I think it's prudent in full transparency to talk about my short-term goals, the stocks that I'm currently trading when it comes to Google, Meta, give you some insight on that as we review my retirement accounts and the goals within those accounts as I look forward and, at this $500,000 mark and just what my plans are. So if you're on a path to financial independence, if you appreciate myself, there's no other Finfluencer clown on this platform like me. Join me on my journey, guys. Hit that subscribe button because this market is doing exactly what I hope it would do, and I hope it continues to do because we are starting to correct this Friday. We're only down a little bit. I hope we go further into correction territory because Google continues to crush. And Google has been one of my best calls of the year, and I am heavily over leveraged for my personal risk tolerance. I told you guys I doubled up the position between my fiance and I. It's over 10% of our combined accounts. That is not healthy. Obviously, that is not something I wanted to do for the long term. I do want to hold Google for the long term, but about half the position size that I currently have. And Google has checked just about all of my boxes. I told you guys that this hype about LLMs like ChatGPT stealing market share from Google search was overhyped. And with the recent earnings just absolutely crushing, showing that Google search revenue is starting to go back up, that box was checked. We got that right. I told you guys Google doesn't deserve to be trading at a 17, 18 times multiple. It should be closer to a 25, 30 times multiple. Check, we're over 25 times. I told you guys that this court case for this monopolistic fine, the final hearing for the remedies, wasn't going to be as severe or impactful as the media was making it out to be. Check, that jumped the stock up 10% this week. Finally, I plan on selling half the position down somewhere around 240, 250. That was my price target, and we're knocking on that door. So if we can get there while the market corrects, I will be ever grateful because I'm going to be rolling over that profit into the S&P 500 and into VDY within my tax advantaged account. My TFSA has been a vehicle that I've been using. I used it a couple years ago to purchase a piece of real estate, and I've been fighting to build it back. And I still have about another 25, 30K worth of contribution room that I'm slowly starting to build out. Currently, the value of this account is almost 190,000, and I've got about 91 shares of Google in here. This is about half the position. The other half is sitting within my corporate account, and I will go long Google in my corporate account. And my fiance also holds some shares that she'll go long as well. But I want to take the entire position out of here that I've been using as short-term leverage to try and outpace the S&P and lock in tax-free gains, at which I'll take those gains and do what I've always done and diversify it into the S&P. And I've always had a goal, even since I started building this account back, to get $100,000 in VDY and $100,000 in VOO in the Canadian currency value. And that means I only got to get about 72,000 VOO, 73,000 to equal 100,000 CAD. And that's very easy with Google. Throw several thousand there, take the rest of it, put it in VDY, a few more contributions, and I'm where I want to be. Now, VOO has become a heavily leveraged position in my account, not by choice. It's just because it's rallied so damn much, and I don't really feel like selling any of it. I told you guys I want 100,000 of VOO in my TFSA. I have 100,000 of VOO in my RSP after selling SCHD out and converting it during that April crash, which is, again, boding incredibly favorably to my account here, up 18% now. And then I wanted 100,000 of VOO in my my corporate account. Now, because I've held VOO so long in my corporate account, it's up 47%. It's almost worth 100,000 US. Again, I have no plans to sell any of this. I am going to keep these. I'm going to go long. I mean, we have an incredibly large amount of capital in the S&P, and I'm very grateful for that, and it's going to be part of the retirement vehicle moving forward. But hereafter, with the extra contribution room I have in my TFSA, I am going to look at globally diversifying. As I've started to do in my RSP, I've been allocating to XEQT. It's a relative new position, but it is a position toward wealth preservation. You have to recognize there's periods, especially if you're looking over a 30-year period, where the US isn't going to be the primary performer. And as we sit here today, we can see that the global market ETFs, like emerging market ETFs like IEMG here, is up 19%, excluding the 3% yield that it offers. The Canadian markets, VCE, up 15%, excluding the dividend, and the S&P's lagging by quite a few percentage points. Now, there's speculation that this has to do with interest rate cuts because Canada's cut interest rates aggressively. Global markets have cut interest rates. The U.S. is laggard quite aggressively toward cutting rates, but now we're knocking on the door of we know it's coming. And if we get material cuts over the next 3, 6, 12 months, it could bode for the lower half of the market that is more dividend oriented, that is more infrastructure, real estate oriented. A lot of Canadian banks, Canadian companies are heavily sensitive to interest rates. Infrastructure companies like Enbridge, TELUS, we've discussed, and all those are now in their recovery play modes, some hitting all-time highs like Enbridge. So it's going to be neat to see if the S&P actually does better on the back of interest rate cuts and the bottom half of the market starts to do materially better. And I've talked about interest rate recovery plays like real estate ETFs like V&Q, which have not done that much over the last few years. But I think if you follow this ETF, especially with how sensitive these stocks are specifically to interest rates, that there could be a short-term play to outsized returns. V&Q offers just under a 4% yield. And I know it hasn't been that attractive overall, but sometimes when you buy these, for specific news-based events is more important than just cost averaging into them at random times, because obviously being in the S&P has been way more favorable over the last decade than being in this ETF. But I still think if you're an income-oriented investor, now might be the time to start looking for those interest rate recovery plays. Now, whether this makes its way into my portfolio or not, I'm still not sure, because again, like I'm sitting in this mode right now where I still want to finish up my Google trade. I still want to go long, presuming the fundamentals remain intact for Google and Meta within my corporate account. And again, I just really want to build out my short-term goals as I knock on the door of FIRE. I've told you guys that I never thought I'd be where I'm at this stage, because we're very aggressively paying down our mortgage. We should have it paid off within the next 2 years. Our short-term goals, we're very closely knocking on the door of having that within our retirement accounts and my corporate account, where if I want to quit a job, my fiance wants to quit her job, if we want to have a kid, like our portfolio is making us more than a salaried income at an average 10% rate of return, at which we'd only need to draw against 4 or 5% of that to basically cover our cost of living. And to me, that is finally lifting the goal off my back that was at 23 years old to be financially independent within 10 or 15 years by putting away somewhere between 40 to 50% of my take-home pay. And I'm living proof that that is possible, and we've been very blessed and fortunate and lucky to be in a perpetual bull market that has propelled this for me. But I've also been diligent and very selective in the stocks that I've used to help excel that goal. And I mean, the numbers speak for themselves when you look at the returns in my TFSA and RSP. Like I've absolutely crushed the S&P 500, and I just don't want to get greedy with it. I mean, I've done it. I've made it work. So why not focus on wealth preservation at this point? Lock in what I would consider very long-term, never touch kind of investments. And then from there, maybe speculate. Maybe with new capital, we start speculating a bit more on my corporate account, guys. Maybe we start, mixing things up. I don't know what the future holds for me or this channel, but I can't believe when I started this channel back in 2019, only having $100,000, to being where we're at today, owning a piece of real estate in one of the most valued cities in the world, Toronto, almost having that mortgage paid off, and, having a sizable investment account that goes beyond the value of this mortgage that can support, support the real estate, support our living. And I'm just here to tell you it is possible, guys. And thanks to this community keeping me on track, and this channel hopefully helping keep you on track to just keep steadfast, keep investing. Told you guys, don't play speculative futures, just buy, hold. And in a market like this, you couldn't have really lost, guys, if you just stayed on track. And I'm hoping this channel helps you continue to do so, and I'm hoping I can find a way to inspire the younger generation to do so as well. And maybe that'll be more of the focus in the future. I'm not going to be so focused on my own portfolio. I'll probably stop showing you guys my portfolio updates because there just won't be a point, I don't think. But yeah, it's been a marvelous journey, and I appreciate you all for joining me. And thanks for everyone that's done one-on-ones, gone to KyleLivingston.com and has supported me along the way. But I'd love to know what you're doing, what you think about all this, and especially this market environment in that comment section. But as always, I look forward to catching you in the next one.